Now I am with yet another problem on the redemption of preference shares, problem number 5. So here we are given the balance sheet of EBC Company Limited as on 31st 3 2021. So you have items on the liability side, 2000 equity shares of rupees 100 each fully paid up. So 2 lakhs is there. 8,000 10% redeemable preference shares of rupees 100 each. So it is fully paid up. So I have told you, whenever there is redemption of preference shares, if it is not fully paid up, we will have to make the final call and see to it the journal entries concerning the same are recorded. Now you have the securities premium to the tune of rupees 10,000. General reserves is there to the tune of 20,000. So sundry creditors existing in the company is 4,70,000. So on the assets, we have sundry assets and the cash at bank. So the company decided to redeem the preference shares at a premium. So here again, the company is going for the redemption of preference shares at the premium. So here, and for that, it has issued 80,000 equity shares of rupees 10 each at a premium of 10% to the existing shares. So here, the company has decided to go about the uh, redemption of preference shares at premium, and for the same, the company is making a fresh issue of equity shares to the existing shareholders at a premium of 10%. So whenever you are paying the premium amount for the outgoing redeemable preference shares, you need to make it good by using the securities premium amount. So if in case it is not there, the company resorts to get the share premium amount by issue of shares at premium. So that is why this particular adjustment is done, or an arrangement is gone about by the company. The shares were duly subscribed and paid for the existing shareholders. Write the journal entries and prepare the balance sheet. So we will have to look at the journal entries now. Now, this is 8,000 10% preference shares, which will have to be redeemed now. 10% preference share capital account data, premium on preference shares account data to the preference shareholders account. This is our total amount that is due to the preference shareholders, 8,80,000. So here, as I told, the securities premium amount that is standing to the credit of share securities premium in the liability side is 10,000. So here the company has to transfer, as I told, securities premium account data to the premium on redemption of this has to be transferred over there so that they are able to take the money from the securities premium. So here, if you see, there is only 10,000 that is existing in the organization on the liability side. So what they do is they collect the fresh issue of equity shares amount, right? So there they are collecting 80,000. So bank account is debited because 8,80,000 is what you receive from the fresh issue of equity shares that were at premium. So securities premium account is 80,000 and equity share capital is 8 lakh. So whenever we are issuing the preference shares at premium, that amount cannot be added up to the capital, that has to be shown separately. Okay, so securities premium account data to and equity share capital accounts are credited with 80,000 and 8 lakhs respectively. Now, finally, preference shareholders account data to bank account. This is the amount that we paid to the outgoing preference shareholders. So 8,80,000 is debited to the preference shareholders account and bank account is credited. Finally, let us drop the balance sheet here. So share capital, when it comes to the share capital, we already had 2 lakhs equity share capital in the beginning. So that is put in here. 80,000 is the fresh issue of equity shares. So securities premium, we already had 10,000. So then 80,000 is what is going out of the business, and 80,000 is what is received by the fresh issue of equity shares at the premium. So finally, we are left with 10,000. Okay, so this is what it is. So this is not 1 lakh, this is 10,000. So general reserve is 20,000, so that is not touched upon, and the sundry creditors is 4,70,000. Looking at the asset side here, sundry assets are 10 lakhs. Cash at bank we had 5 lakhs, is it not? So cash at bank is 5 lakhs here. So with the fresh issue of equity shares, we have been able to muster in 8 lakhs rupees, 8,80,000. So 8,80,000 is what we get by the fresh issue of equity shares. And finally, the amount that is paid to the preference shareholders is again 8,80,000. So finally, we are left with 5 lakhs. So if you total it up, 15 lakhs is the total on the asset side as well as on the liability side. This is about this problem. Thank you.